Welcome to an insightful session on income tax and GST. Join us for an engaging and informative session as we delve into the intricacies of income tax and GST. Whoever you are navigating the complexities of taxation, this session promises to provide valuable insights and practical guidance to help you stay ahead in today's dynamic tax landscape. We have the most knowledgeable speakers delivering the session to you and a dedicated team of CPE committee bringing the session to you. I take my privilege in introducing this panel right now, which is the chairman of the board, CA Purushottam Khandelwal ji, CA Gyanchand Mishra ji, and our honorable speaker, CA Dr. Girish Ahuja ji, and the other members of the CPE committee. I would begin the introduction of individual panelists. Now I shall begin with the introduction of the Vice Chairman of the Board, CA Gyanchand Mishra ji. He's the Vice Chairman.
Nakul ji, sorry.
Nakul ji, skip kar do hamara.
Actually, we are carrying the committee for last 2 years. So we'll request you to kindly just introduce our learned speakers.
Yes.
And no more introduction for me and Purushottam Bhai would be required.
Yes.
With the permission of Chairman, sir.
Yes, sir. Always, sir.
That's really kind of you. Thank you so much. That should all be the introduction for our vice chairman and chairman, that they have decided to move it on to the honorable speaker, CA Dr. Girish Ahuja ji, who has completed his chartered accountancy and was a rank holder in both intermediate and final examination. He has authored over 25 books on direct taxation for both students and professionals. He has also delivered more than 4,100 lectures on various topics of direct tax across multiple platforms. If I start talking a lot about him, I'll finish the entire session in his introduction. So I'll keep my words short and I will hand over the session to our learned speaker, CA Dr. Girish Ahuja ji. Over to you, sir.
Before speaking, Dr. Girish Ahuja, I would like to request Gyan Mishra ji, chairman of the vice chairman of this committee, please say a few words.
So much thank you, respected chairman, CA Purushottam Khandelwal ji, guru and guide of ourselves and of course for the profession, CA Dr. Girish Ahuja sir, moderator of the program, Nakul Arora ji, office secretary Ajita Tiwari ji and entire team, and all respected participants who have joined virtually to attend this program. Good evening to one and all. Friends, let me thank to the Honorable President of the Institute, who has just given one more year to me as well as to our respected Chairman Sir to head this committee. And let me thank to Chairman Sir, who has been kind enough to accommodate me again as Vice Chairman in the committee. And a lot of reforms have been, undertaken last year. This year, again, we will try to have few of the pending jobs which could not be done last year. And in that job, one especially, if I would like precisely tell, that is with respect to the technology, that is mobile app, which is due, and we are conversation and we are in negotiation with the TCS. And I'm sure that our chairman, sir, will tell about the same more. As far as the topic is concerned, friends, 43BH is a very important topic. This is with respect to the disallowance of the certain expenses under the income tax provisions of the MSME payments. So, will not speak much as our learned speaker is here. And this is the first program in this new series of the council year. So, I welcome one and all from core of my heart. We have witnessed that each and every participant has showered so much love and affection to the committee across the year, and I'm expecting this year also will be the wonderful year, and we shall certainly not only enrich our knowledge and skills from the various dignitaries of the specialized interest areas, but also try to have some practical aspects learning through virtual learning mode in coming time. So much thank you, Purushottam Bhai, for your across year guidance last year, and I am sure that this year is going to be one of the miraculous years in the history of the CPE committee so far. So thank you very much, Nakul ji, and my congratulations, Ajit ji, for continued effort, and I welcome Sri Dr. Girish Ahuja sir for his opening knowledge learning session in this today's program. Thank you one and all.
Thank you very much, sir, for your kind words. Now, may I request the chairman of the board, CA Purushottam Khandelwal ji, to say a few words in the opening remarks of the session.
Good evening, respected Dr. C.A. Girish Ahuja ji, Tax Group, very humble, noble, and kind to sir, spare your first valuable time for the first day of this my CP committee. First, this is the first program. So, sir, I welcome all in this first program of the CP committee. Vice Chairman and my dear friend Gyan Mishra ji, who is always available for the members, students, and my thanks to the President sir for again giving me opportunity to work with the Gyan Mishra ji for CP committee, Ajitnath Tiwari ji, Nukul Arora ji. So this is the first seminar of the CP committee of the ICAI. We have changed time from 3 to 5. This year we will do the program from 4 to 6 because in Gujarat, majority of the cities in Gujarat, Rajkot, Jamnagar, all they are taking rest. So we have planned this time to fix the time for CP committee for the 4 to 6. So the topic of the today's seminar is 43BH is a very important topic and relevant and burning issue. I will not take much of the time. I hand over charge to Dr. Girish Ahuja sir for further. Thank you. Thank you so much.
Do you have to say anything to Nakulji or should I start?
No, sir. Over to you. He's put it over to you directly.
Okay. Good afternoon to everyone. Central Council member and very dear friend, CP Committee Chairman, CA Purushottam Khandelwal ji. Another young and energetic person, and of course, again a very good friend, Vice Chairman, CA Gyan Chandra Mishra ji, who is connected, who is not in the office. He's in the car, but he's connected to the iPhone. And I'm noticing, and the moderator of this program, Nakul Arora ji, Secretary of this CP Committee, Ajitnath Tiwari ji, the other members, ladies and gentlemen. Well, friend, regarding 43BH. Everybody knows about 43B. Who doesn't know it? But let me tell you that 43B clause H is entirely different. Because when you talk about section 43B A to F, there the expense claimed as deduction will be allowed to you only when the payment of the same is made on or before the due date of furnishing the return of income under 139(1), failing which the deduction will be allowed in the previous year in which payment is made. This everyone knows, and they have been doing it for ages of 43B. Earlier, 43B was small, then it was added D, E, F, G, H. Now H has been added. But clause H is entirely different from other, because they have said under 43B that clause, provided that clause H will not be applicable as it is applicable for furnishing a return before 139(1). Clause H is not covered in there. Now, what is 43B? Clause H. It says any sum payable to any micro or small enterprise after the date specified under section 15 of the MSME Act shall be disallowed. What does it say? Any sum payable. You have to see sum payable on 31st March 2024. This section is applicable from assessment year 2024-25. So first duty is on 31st March, is there any sum payable to micro or small enterprise? You have to see. If it is payable, the question is you have to make the payment before the expiry of before the date specified under section 15 of the MSME Act. Now, the date specified under MSME Act is that every buyer, section 15 says, shall every buyer, please note the word, Nakulji, every buyer shall make the payment to the seller of the goods or services, or goods or service, on or before the time agreed upon between the seller and buyer in writing. Please note the word, what is it saying? Every what is it? Every buyer shall make the payment. Within what time? Before the expiry of date specified in section 15 of the MSME Act. Right? What is the date? The date that has to be paid on or before the date agreed upon in writing. Please note the word. Date agreed upon in writing within the time specified on or before the time you have to make the payment. And if there is no agreement, then before the appointed day. Please note, before the appointed day, where it is written in the MSME, if it is in writing, on or before the date agreed upon. The first question is that if there is an agreement in writing, you have to make the payment on or before the date specified there as per the terms. If the now they have said a proviso. However, in no case the date agreed upon between the buyer and the seller shall exceed 45 days. There is no question that you can make the payment after 45 days. You may enter into an agreement. If you have entered into an agreement for 30 days, you have to make the payment on or before 30 days. If you have entered into an agreement for 40 days, on or before 40 days. If you have entered into an agreement for 45 days, on or before 45 days. But if you have entered into an agreement for more than 45 days, says in no case it will exceed 45 days. Means maximum time where the payment has to be made if there is an agreement in writing is 45 days. And if there is no agreement, then it says before the appointed day. On or before, it is not, it is on or before the appointed day. Section 2 defines what is an appointed date. Appointed date means a date after the immediately expiring the 15 days of the supply of goods or rendering of services. Date expiring after 15 days. And I said you have to make the payment before the appointed date, meaning thereby you have to make the payment within 15 days. You cannot go beyond 15 days because 16th day you cannot do it. So if there is an agreement on or before 45 days or the date agreed upon, which can be not more than 45 days or otherwise, you have to make the payment within 15 days of the receipt. Now the question is, if there is a sum payable on 31st March, auditor duty is to find out. The list will be given to you of the small, find out when was the supply made, when was the goods supplied, or the rent services were rendered. If the services were rendered, let's say, in the month of April, May, June, July, August, September, October, November, December, and still it is payable, the question is, the time has already expired. 45 days, even if you have agreed upon, the 45 days period is expired. There is a question that the law was earlier there also. If you do not make the payment within the specified time, you have to pay interest calculated at the rate of 3 times of the bank rate, which is 6.5%, compounded at monthly rest. Compounded at, this law is already there. Section 22 says you are liable to, please note the word, you shall be liable to pay. How much interest? 3 times of the bank interest if there is a delay in making the payment beyond 45 days or agreed days or 15 days if there is no agreement. But nobody was finding a case because there is a micro and small facilitation council. You have to refer the case to that council that I am not getting the payment. It is not authority, it is a different authority. What is the name? Micro and Small Facilitation Council. You have to report, you have to refer the case to the council that here, I'm not getting my payment. Although Section 23 says of the MSME Act that you have to provide for that interest in your annual accounts. Well, Nakulji, the other people are also listening. Nobody has done that. Some of people are providing, but there are many who are not providing. Even if some people are providing, they are not making the payment. Why? The demand is not there. You just press the SVC, they don't request you or to make the payment. They cannot afford to do that. So then as MSME approached the authority that look here, although you have provided this 3-time interest and monthly rest compounded, but nobody is paying us. And we have no courage. We have no courage to go to the council to settle our case. Because once I go to the council for settlement case, I may get the interest, but they will stop buying goods or taking services from me. So therefore, nobody is bothering. Although it is written in the section 23 that you have to provide for it, still nobody is providing. So the law changed. Income tax department has not done anything. Let me tell you. The MSME has forced, MSE has forced us to bring a law so that it becomes compulsory for the buyer to make the payment within the requisite time. And it is said that if you do not make the payment within the time specified under the agreement or before 15 or before 15 days, kindly note before appointed date, that is within 15 days, kindly note that expense shall be disallowed. And you will be allowed this expense only in the previous year in which the payment is made. Only in the previous year in which payment is made. Now think of a case, Nakulji. I have bought goods from somebody for 1 crore. I have not made the payment. I'm showing my income every year, my income every year, a total income is about, say, let's say 20 lakh. Now this year I have not made the payment within the requisite time. This 1 crore will be disallowed. And 1 crore, once it is disallowed, I will have to pay tax on 1 crore 20 lakh. From where I will get that money to make the payment of tax on 1 crore 20 lakh. I might have arranged somehow or other, might have taken it. Okay. Now the question is, this year 1 crore 20 paid tax. Next year again my income is around 20 lakh. Now I have made the payment next year. So this time there will be a loss of 80 lakh. Am I right? 220,
Yes,
1 crore you were making a payment, 20 lakh is the profit. So 80 lakh is going to be the loss. Now I will have to carry for the loss for many years, 3 years, 4 years, 5 years, whatever it. I otherwise not having money. And then you are asking me to pay tax to me. So therefore a restriction has been imposed. Kindly see to it that on 31st March, what is the amount to pay? If the supply is made, let's say on 28th March, then you have 15 days or 45 days as the case may be. So when you are going to audit and you have to report in Form 3CD, so far 3CD has not incorporated this, but new 3CD will incorporate and you will have to report. What will you report? You will check from 28th to 45 days. If it is 45, it is 40, 40 days, it will be 30, 30 days. Or if nothing, 15 days. Has the payment been made? If the payment is made, no question of reporting. But if the payment is not made, you will have to report in 43B clause H, the payment has not been made. And once the payment is not made, you are automatically, although you don't file a return is filed by the assessee, but assessee will automatically have to disallow that 1 crore rupees because the payment has not been made within the requisite time specified under section 15 of the MSME Act. Now, if you have made supply in January, but you have made, or maybe August, but you have made the payment up to 31st March, it is not due on 31st March. There is no question of any disallowance, but at the same time, interest which was already there, that will be covered. But I know that although section 23 of the MSME says this interest shall not be allowed as deduction under Income Tax Act, but nobody is paying that interest. If they pay, it is a different issue. You will not be allowed deduction of that interest. But that point is different, interest part. Here, though, I will be disallowed expense because my auditor will report that under 43BH, the payment has not been paid within the time specified. And the moment I write it, computer will pick up when you are filing your when your intimation is being sent to you under 143.1, immediately they will disallow if you have not disallowed. If you have disallowed it, is otherwise the case. So kindly note that first thing you have to see that now question is, you are buying goods from whom? Nakulji, I'm buying goods from, or I'm taking services from micro or small enterprise.
yes.
The question is, micro enterprise has been defined in section 7. Section 7 of the SMSC Act. I am not taking the definition, but you know that micro is one whose plant and machinery investment does not exceed 1 crore and turnover does not exceed 1 crore and 10 crore. And you are small when it is more than 1 crore, but does not exceed 10 crore and turnover does not exceed 50 crore. Am I right? This
Yes,
is
sir.
micro and small. But there's a micro and small. Supplier definition has been given. Supplier definition has been given under section 2, clause 9. What does supplier definition says? Supplier means a micro or small enterprise. देखिए word सुनिए. Supplier means a micro or small enterprise who has filed memorandum under MSME Act and includes the following. Please note, filed memorandum means that should be registered. As per the law, Nakulji, you may not get yourself registered under micro small enterprise. It is discretionary. But if you register yourself, you will have to file a memorandum to the authority concerned, and you have to file means you have to be registered. Please wait. And it includes. Please note the include. When I say includes, because you are opening it, I'm very happy. Open it in MSME. Please do that. And includes number national small scale industry. It includes state industrial development corporation. There is one more which is very important. That word is very important. It includes a company or a cooperative society or a trust or any body, whatever name called, who has been constituted under any law for the time being force, for marketing, who's engaged in marketing the goods of the micro or small enterprise. Am I right,
Yes, sir.
sir?
Yes, sir.
People think that this C clause is for traders. No, sir. No, sir. This C clause is not for traders. You read, sir. Now you read from the authenticator, which I have told. Please read out. It reads any company. First is, now read section 2, clause 9. And clause 2, section 2, clause N. Read it.
Section 2, clause
Supply
N.
means 2 clause N. Section 2.
N.
N. Meaning a supplier.
Okay, sir. I'm missing out on the act. Maybe this is not containing. Maybe this
This
is
is
the
in the
older.
beginning, my dear. It is in the beginning, section 2.
It is in the beginning, but it is missing. I think it's the older version of the act that I've opened. Maybe
So
I'm
please believe me. I thought if it is written there, he will read out for you. But please open it and then I'm again repeating. Now, should please leave it. Section 2N. Supplier means a micro or small enterprise, right? Who has filed a memorandum to the prescribed authority. Am I right? And includes. Please note the word includes. First is who has filed memorandum. So registration is compulsory. But wait, includes national small scale industry. Now, small scale industry may not file a memorandum. They are covered under micro small. Number 2, state industrial development corporation. They may not file a memorandum. They will be called micro or small enterprise. Agree? 3, any company or a cooperative society or a trust or a body by whatever name called constituted under any law for the time being in force, who is engaged in the marketing of the goods of small or medium enterprise, small or micro and small enterprise. It does not mean trader. It means like farmers. There are farmers, there are societies in the villages who are marketing the goods grown by its member. They are marking. Here also, these are the special type of organization, maybe a company, maybe a body, who has been registered. And what is the role? Only to market goods of micro or small enterprise. They are not general trader. They have been specially constituted under any law or a certain specific purpose. Agreed? Like societies register. So therefore, let me tell you, you have to be registered. I'm not talking about a National Small Industry Corporation. I'm not talking about State Financial Corporation. I'm not talking about this. You have to be registered. So, but registration is discretionary. So unless and until that small or micro small enterprise registered, Section 43BH is not applicable. First point. Second point. What is a micro? I've told you. What is the small enterprise? I told you. Turnover and investment in plant and machinery. And this will change every year. You have to get renewal every year. But wait a minute. What is an enterprise? Now try to listen, Nakulji and everybody. What is an enterprise? Section 2, clause E has defined an enterprise. Have you got it now?
Yes, sir. Now I got it.
Ab mil gaya. You know, it takes time. 2E. Listen to me what is written there. It is written there. What I was saying? 2E. For what purpose I told you?
Enterprise.
Enterprise. It written there. Read. I'm speaking. Enterprise means any industrial undertaking. Am I right? Comma, a business concern or any establishment, any other establishment by whatever name called. Am I right? Who is engaged in the manufacturing or processing of goods pertaining to the industry specified in the Schedule of Industrial Development Act and includes a person who is providing or rendering the services. Am I right?
Yes,
Am
sir.
I right?
Yes,
so
sir.
meaning hereby you are enterprise, and enterprise, which is enterprise covered? Who is engaged in the manufacturing or processing of an article or process of goods pertaining to the schedule specified under a district. Meaning hereby, traders are not covered. Traders are not covered as a seller. Traders are not covered in the definition by seller. If he is a pure trader, he is not covered because they very clearly said that you should be engaged. You may be called what you call industrial undertaking. You may be called any business concern. You may be called any other establishment. Word uses by whatever name called. But the next thing is who is engaged in the manufacturing or processing of goods pertaining to the industry specified under Industrial Development Act. And now people are saying, sir, there is a circular and notification, in which notification traders have also been taken as micro or small enterprise. Wait a minute. I give you the history behind it. You know, the banks used to lend to the priority sector. They are under obligation to lend about 15%. Purushottamji, am I right? They are also spent 15% to the priority sector.
Yes,
and during that time, they used to give the loan to even what you call trader. Reserve Bank of India said traders are not covered. They are worried the priority in the trader case. They are not covered. So you cannot lend to them at concessional rate. You know, you get a concessional rate of tax, a rate of interest. So then the trader approached the banks and then they approached the small scale. Sir, we are also small person. We are also trader. We are buying goods and selling goods. We should also be given loan at concessional rate, treated as micro small enterprise. So, Purushottamji, they were allowed to get themselves registered under micro small enterprise, but the notification very clearly says that this is only for the purpose of lending to them. They are not otherwise covered under micro small, only for the purpose of taking the benefit of our lower rate of interest. They have been given a status of micro or small enterprise. Otherwise, they are not covered under that. So it is clear now, it is covered for micro small enterprise who are manufacturing or who are rendering services, who are rendering services or providing services. They are covered. Question is, how do I know that person is a micro or small enterprise? First thing, either that person who is a supplier should inform me that I am a micro or small enterprise. Here is the copy of the certificate. I'm giving it to you. There are certain person, Purushottamji, who put the number of micro small enterprise on the bill itself. On the bill itself. or they may provide you the number. Please note, kindly check, go to the portal of Udyam, put that number there. Quite may be possible that it is a fraud. Number is a fraud. They just, to take the benefit of 15 days or 45 days, they are quoting any number to you and saying that they are micro small. So the duty of the client is to verify on the portal of the Udyam whether the number provided by him is genuine. And if it is genuine, then it's okay. It's okay, he's provided. Or he has written on the bill, but you should check up. But suppose I don't know the number, then what will I do? I don't know the number. He has not provided me any number. Then better is, it is our duty, the buyer of duty, to write to the seller, please let us know whether you are covered under micro or small enterprise. If yes, kindly provide us the certificate of registration, that is whatever you have filed, of the micro small enterprise to enable you to make the payment within the requisite time. Okay? He has not responded. Give him one more. Take the opportunity which we had written to you on such and such date, copy enclosed to let us know whether you are covered as you are a micro or small enterprise and you were supposed to provide at the micro side, but you have not responded to the letter. We are giving one more opportunity and asking you to file that registration certificate within 10 days, 7 days, or 15 days of the receipt of this letter, failing which we will presume that you are not a micro or small enterprise. Are you getting my point? When you have given opportunity, given not once, even twice, or you may take one more chance, and if he does not respond, meaning thereby, I am not responsible. Chartered accountant will see the documents, whether the intimation was sent, whether any reply was received or not received, all documentary evidence, you keep it, then you can presume that they have not informed us. So how do we know that they are micro or small? Purushottam ji, I am right. This is the way of having a second alternative if he does not provide. Clear? Now he does not provide me. I am not duty bound to pay the payment in 15 days or 45 days as the case may be. But if he provides, I will have to make the payment as per the law. Correct, sir? Now let me tell you, this is what is, I told you, what is an enterprise, the meaning of an enterprise. I've told you what is an appointed day. I have told you what is. Now, there is a possibility that there is a defect in the goods or there may be anything. The law says, if any objection is raised after the supply of goods, after the supply of goods, if any objection is raised, it must be raised before the expiry of 15 days of the supply of goods, or within 15 days you should raise an objection. And if the objection is raised, then in that case, the 15 days period will start after the objection is removed, or 45 days period will start after the objection is removed. So if there is a quality issue, if there is any other issue, it is your duty to write a letter to the supplier that such and such is the objection in the supply you have made to me, and kindly note within 15 days. Kindly note, if he replies to that letter, then the period of 15 days, etc., will start from the receipt of removal of that objection. Removal of that objection. Clear? If it is raised, you will. Otherwise, it will be deemed acceptance. If no objection is raised within a period of 15 days from the receipt of goods or services, then please note it will be treated as deemed acceptance. Deemed acceptance. Okay. You have not raised any objection. Obviously, it is a deemed acceptance, and you have to make the payment within 15 days, because here the time is 15 days or agreed upon. Clear? This is also the next issue which I wanted to get. So our duty is to see to it that the payment has been made. Otherwise, we will report that in your 43B column that such and such payment has not been made within the time allowed, or it is paid after such and such date. You will have to mention. Let me see what kind of a 3CD will come. But the difficulty is in our case, we have to report it. We have to report it. Otherwise, they may say you have committed a professional misconduct. Why didn't you report it? So be careful about that. But wait a minute. Somebody may asking me whether 44 AD, in the case of 44 AD, this section is applicable or not. 43B. 44 AD, are you understanding? Or 44 ADA, professional. Will it be covered? I said, read section 44 AD, read section 44 ADA, read section 44 AE, 44E, AE. It is written, notwithstanding anything contained under section 28 to 43C. Kindly note, notwithstanding anything contained under section 28 to 43C. That is, 43B is not applicable in the case of 44 AD. Why it is not applicable? Because we are not maintaining books of account. We are presuming your income to be 6% or 8% as the case may be. In the case of professional, we are presuming income 50%. You are not maintaining, you are not required to maintain any books of account. So therefore, the section starts notwithstanding anything contained under section 28 to 43C. I always ask you, in 44 AD, is section 48.3 applicable? 48.3 means payment of exceeding 10,000 in cash. Is 40IA applicable? 40IA is non-deduction of tax at source. 40IA is not applicable. 30%, there is no question. 40IA is not applicable. But what is applicable is penalty for non-deduction of tax at source under section 271 capital C. But section is not applicable because it is already overriding section 43B. It is overriding section 48.3. It is overriding section 40AIA for non-deduction. That 30% is not a question. Somebody asked me, sir, he has not deducted the tax and he has committed a default of 43BH also. So will I take 30% disallowed first and 70% is no question, my dear, no question. Because when you are getting disallowance of 100%, where is the question of 30%? And notwithstanding is already written there. So please note, you will be disallowed 100% under 43BH and not under 40IA. What happens is, since you have committed a default of 40IA, you may be liable for penalty under 271C, which is equal to 100% of the tax not deducted. But there is no question of disallowance of 30% under 44AD. Clear, sir? 44AD, 44ADA, they are not covered under this section. 43B, clause H, they are not covered. Then you must have listened to that video which is going viral everywhere. More than 1 million people have done. Somebody asked me a question in the Gyan Bhavan. I don't know what kind of a question he asked. He says, now he may say whatever he says, the people will issue the check and ask the micro small enterprise not to deposit the check. I said, wonderful. What kind of excuse or what kind of a thing you are executing here? Please tell your client this cannot happen. You have issued a check and he doesn't deposit. He's a micro enterprise. He's a small enterprise. He doesn't have money and he will wait for 90 days to deposit the check. Is it possible? And even if he waits, can it be done for every case? Might be done for one case. Can it be done for other cases also? What are you doing? And secondly, under the Negotiable Instrument Act, you should have a balance on the date of issue of check.
Of the check. Yes, sir.
That is also there. And the person is keep on asking this question that this can happen. I said, sudhar jao, nahi to Modi ji sudhar denge. आप भी बदल जाओ. अगर बदलोगे नहीं तो बड़ा मुश्किल काम होगा. I'm telling you, things have become altogether different. We have done hard work, not for supporting the client. He does not support us. You should report as it is if it is wrong. Let us not take a chance. I have so many times told income tax department knows much more than what you know about yourself. You have already seen what kind of information are coming to the income tax department. There is an exchange of 135 countries. The information from one country to another country. People are going abroad. Purushottam ji,
yes,
taking VAT the refund at the airport.
Airport.
Here you take VAT refund. I am not saying anything to you, but you know that is recorded in your passport. If it is your white,
without passport, they are not refunding VAT refund at airport. So they know what you buy in the foreign.
Or they send you to their account. What are you talking, sir? Gone are the days. This is digitalization. Never advise your client and tell your client, be careful. वो वक्त बदल गया है. Things have altogether changed, and we have done hard work, and we have done real hard work to pass chartered, and not for doing such hanky-panky things. Gone are the days when somebody might have done it. Now nobody can do it. So let me tell you, now I'm coming to the point that you have to verify on 31st March. Another point, Nakulji.
Yes,
There
sir.
may be a money due of 31st March 23. Money due of 31st March 23. But at that 31st March 2023, nothing was disallowed. So even if you have not made the payment at that time and still it is due, it is 43BH is not applicable. 43BH is applicable if any sum is due on 31st March 24 on supply made between 1st April 23 to 31st March 24. We are nothing to do 31st March 23 because that must have already been allowed to you because that time 43B was not applicable. So there is no question of doing that. But somebody told me that we will do one thing. Such people are very clever. We will withhold the money and make the payment of the current bills and let money be both. First point, whatever money you have withheld, you are liable to pay interest. You are not paying, but the interest liability is already there. And you will keep on multiplying 3 times of the bank rate. Second point, if you are making bill-wise payment, then it may be a different thing. You can say that old bills, there were dispute. But if you are making payment on account, kindly note adjustment is first in, first out. You cannot say, I have paid the payment of the latest bill and I'm not making the payment of the earlier bill. Kindly note, if you are giving the exact amount, then it could be different case. If you are giving on account money, they have to adjust this earlier. Clear? This point. Another point. Now, a question which has come to my mind. I may be wrong, but I'm telling you, this is not beneficial for we chartered account, even if we are registered. Take a Nakul Aruladi, try to
Yes, sir.
because you are a moderator, so I'm attracting you. Purushottamji is also there. He will say,
Yes, I'm here, sir. I'm listening to you, sir.
You are listening to me. Now, so, what is the point? Our audit is done in the month of July. September. But the client provides for these, what you call audit fee in the month of March. He also deducts the TDS in the month of, am I right?
Yes.
Done in your name, Purushottam Khandelwal, and whatever is the name, associate, you are supposed to audit in the month of September. But he has provided and deducted TDS on your account. You will submit the bill after the audit is over in the month of September, let's say earliest September. Now, that money has already been allowed on due basis because you have not rendered the services on 31st. You are rendering services in 30th September and then providing the bill, but that has been allowed on due basis. On due basis, because TDS has already deducted. And then next year again, the same thing will happen. 31st March 25 provision made, audit fee payable, TDS deducted, and then you will submit the bill somewhere in September. It is already claimed in the return. Then what will you? Because even if I give the December 30th September, they may have 45 days to make the payment, but you have to file a return, and in return you will claim the deduction. So this is an issue which I have raised. Let us see what is the opinion of others in this matter. But according to me, for audit, for tax audit, if we are already appointed and TDS has been deducted, we will not be benefited from that. Other services, if we raise the bill, then it is a different issue because they don't have to provide for that. But for audit, already appointed man, already says audit fee provided, and he has deducted the tax. Or you know that when you submit a bill, you take the benefit of that amount only next year. But that is TDS amount next year. Say TDS credited, but not claimed, carry forward and brought forward. You do it every year now. So my point is, TDS of 24, I will take the credit only in the period of when it is deducted, which not in the year deducted. I will carry forward and claim it next year when the payment is made. But at the same time, since return has been filed and the payment has not been made because the payment time is only 30th September, 45 days, let's say. But the return has to be filed by 31st October. So how can you take it? So my point is, in here also, there are gray area. According to me, they will not allow you this kind of thing. They will not allow you this kind of thing. So this is the another issue which I wanted to point out, that we may not be benefited for the audit fee. Maybe for other purpose, we may be benefit. Maybe for GST and all those things, we may get benefit of receiving the payment. But otherwise, we will not get the benefit of this point. Is this clear, sir? This is another point I wanted to. Now, Nakulji, I
Yes,
have
sir.
some time with me. If there are questions in the question box, you are most welcome to ask. Or if I might have left something, you can raise the question and I will answer them. Thank you.
सर मेरा बेसिक क्वेश्चन है, गवर्नमेंट को यू क्यों लाने की जरूरत पड़ी जब दोनों लेने देने वालों को कोई तकलीफ नहीं है, जो माल बेच रहा है उसको पेमेंट ले लेने में प्रॉब्लम, सरकार को जबरदस्ती क्यों दिलाने का?
गवर्नमेंट नहीं लाई, इनकम टैक्स डिपार्टमेंट नहीं लाया. MSME approached that we are not getting payment on time. We are small persons. They are not making, they are exploiting us. You have already provided 3 times interest, but nobody is giving interest. And I'm also not claiming interest. Do bring some law so that he will be bound to pay. He will be forced to pay money to me. Otherwise, that will be disallowed. And government agreed to that without knowing that is what is going to happen. A lot of things are going to happen.
Sir, why
even
not
Surat
given
people.
Some reasonable times to bring this.
Sir, reasonable time is given in MSME Act. It is not, they cannot bring income tax act there. The time is given under the MSME Act. Then they are overruling the MSME Act if they said due date of return. How can they do it? Either the MSME Act time may be increased, otherwise they cannot do it. You have to make the payment on this date. You can't say if you make the payment, this interest will be applicable, but expense will be allowed. Once expense is allowed, who is going to bother about that?
So, sir, to implement MSME Act, they're legally bound under the income tax act.
No, let me tell you, all of us, that it is not our duty. It is not our duty to ask for anything. It is the duty of the MSME or the buyer. We are all chartered accountant.
We have to.
And the practice has been made in the income tax that we will never ask for extension.
Yes.
Has been made. Am I right? They will never ask for extension. Why should we ask for extension?
Why should we? Last year we are not asking for any extension.
And unnecessarily we are getting blame on that. Now listen to me. Nobody approached to them before the parliament was there. Somebody should have approached them. April, May, June, July, August, September, nobody realized. Now the month of February, you are saying, oh, the law is know what to do. Everything is done at the last moment. Now the parliament is not there. How can they change the law? The parliament is not there. And they cannot change the law because next government, maybe Modi government will come. But how can you say technically the Modi government is the government there next time? How can technically wrong? Maybe practically we all know. We all know from heart of heart they are coming. But that does not mean that they should take it for granted. So they cannot do it. The only thing which they can do if a request is made by all people that we are postponing with a beneficial circular for 1 year. And then they will do whatever they like. Well, they may do whatever they like. But we will never approach. The institute will never approach. If they ask advice from us, we can give them advice. But let us not give any advice or ask for extension to the department because they know these are the chartered accountants who are always after us for extension, for such and such thing. Why should they do that? They should follow the law. And we have planned, we have not decided, we will not ask for any extension. Am I right, or sir? You are
100% right, sir.
You are the person who are taking decision in the council. I'm not taking. But I know,
sir, absolutely right, sir. Sir, we will not go for any extension, sir.
Yes. So that's why I'm saying now it has become difficult. But only thing is, if they want, they can postpone by beneficial circular for 1 year. God knows what will happen. Because the government also gives only last day. They keep on waiting. You know that. Anybody else? Any other questions?
Yes, sir. There are pretty good number of questions. I have tried to come up with the ones that were not answered during the session, or maybe I thought were important because the number is huge. So I'll choose the questions according to the best judgment of mine. The first question is whether this provision is applicable to the named creditors for purchase of fixed assets. Like if we purchase
Here, one point is 43B talks about expense claimed as deduction. Is purchase of an asset an expense? Answer is no. Second thing you may say that after all you will claim depreciation on this. Am I right? Wait a minute.
Yes.
Wait a minute. When this 10,000 rupees came, that you cannot make a payment of more than 10,000 rupees, then they said you will not be allowed deduction of the expense. At the same time, they changed section 43(1) actual cost also, that if it is a capital expenditure, the amount which is more than 10,000 shall be ignored for calculating the actual costs. Why? Ignored for calculating the actual cost, whether you are getting depreciation or not, they will ignore it. Have they written anything here? No. Meaning thereby, it is only one more thing. Please note, this is section 43B is only applicable when your income is being taxed under the head profit or gain from business and profession, because 43B is part of business and profession. I am not a chartered accountant, let's say, I buy goods. Will 43BH will be applicable? I'm not doing any business. So if I'm not doing business, what is the need of a 43BH? It is only for a person who are carrying on a business or profession. They have to make the payment within 15 days or 45 days, as the case may be. Clear? Coming. So according to me, capital expenditure, even if you charge depreciation, they have not specifically told not be covered under 43BH. Will not be covered. Next.
Okay, sir. Sir, the case, it's a case study. If a small MSME has made an advance payment for an order, but that is subsequently cancelled. So while claiming the refund, will it be applicable?
I said you have to raise the objection. You have made an advance payment. Have you supplied the goods? The 15 days or 45 days is from the date of supply of goods, not for the advance selling. The 15 days or 40 days has to be counted from the date of delivery of the goods or rendering of the service. The advance is not a rendering of service or anything. You have to, you can adjust the advance, but that now somebody is asking me, can I convert this loan into loan? Answer is no. Already explanation is given under 43B that conversion of money payable into loan is not allowed. It's not a constructive payment at all. Okay.
Yes,
Next.
sir. Just a second. Next question is applicability of 43BH on retention money. I think this is covered in the earlier answer.
Correct.
Then what is
No,
the
retention money is different. He is talking about in some contract cases, what happened is they make the payment 80%, 90%, they hold the order, there may be some warranty, there may be nothing. Wait a minute. First thing is in contract case, which is where the goods and services are both are involved, this is not covered under micro small. Work contract is not covered under micro and small. So they only withhold, nobody else withhold.
Okay, sir. I'm just trying to conclude to the audience that some of the questions are being covered, like 5 or 6 questions are being covered in one answer. So please take your answers accordingly. Now, what are the care or what is the, like, maybe let's say a standard operating procedure for an auditor? What care has he got to take in respect to section 43?
I have said ask for the list, ask for whether they are micro or small. If they are not, they have not asked for whether you have written a letter to them. If they have written on the page, then it is okay. Ask for that whether they have written or not, or if they have a documentary proof and he does not respond, it is not I am not an investigation agency to find out that whether he's small, micro or small. But you should have proper correspondence and you have the documents to prove that we have taken maximum effort to get the number from him, but he has not provided to me any that he is covered under micro or small. That is the point. That is the point. And second point, let me tell you, sometimes they write on the bill itself. When they have written on the bill, they have already intimated. You have only right to check up, but they have intimated to you. So there, you don't have to bother about that. Information is already with you. Okay.
Perfect, sir. Sir, what about the companies? Like, would an enterprise have to pay interest if it is under CIRP period of IBC, like insolvency.
CIRP, IBC, if there is interest payable, they can waive the interest payable in the case of here. And when that is CIRP is the authority given to the IBC. They will do it. If they can waive it, is okay. Otherwise, nothing. Nothing.
Okay, sir. And yes, another question was that there are many questions. I'll wrap up it in one single question. That if there is a misregistration, like either they are not, registration is wrong. Either medium has registered as a micro organization or they are not an MSME and still got a registration. What will be the treatment in this case? As
First
an
thing is,
auditor,
I have to see on the date of transaction whether they were micro or small. Quite possible that in the month of November they got the registration. April to October books I have bought. There is no question because it was not a micro or small enterprise. So therefore, you have to be careful. Date of transaction, number one. Number two, you have performed your duty by asking him to provide the number. Give me the information whether you are micro or small or not. And if he's not providing, how can I know that he's covered? Because either he should give me the number, I can check the number from portal of the Udyam. But if I don't have the number, how can I check it? How can I check that? So it is, I don't want to say anything. You know better what is to be done. Let me tell you, it is not good to suggest anybody the ways and means to handle this situation. Better it is maybe 1 year, maybe you request the government to extend it, but at the same time, the law is law, and we are not there to defeat the provisions of the law. We are not there. I don't agree with that. Anything else?
perfect, sir. The rest of the questions have mostly been covered, or otherwise they are very rudimentary questions, which I really don't want to take a lot of time over. And most of them have been answered in conclusion. Thank you so much, sir, for answering the questions.
So many thanks to you, because I had to leave the place by 5 o'clock, and you have done a wonderful job by limiting it to this place. I have to catch the flight also. Thank you very much, Purushottam ji.
Sir, thank you for coming, sir.
All the
This is a good beginning.
It is only because of your request I had to accept it. Otherwise, it was really impossible for me to go for it. Thank you, sir. Thank you. All the best. I'm leaving, sir. I'm leaving.
Yeah, yes, please.
Yes, so thank you. While he leaves, I would like to propose the official vote of thanks for the first session. I'm really thankful to CA Dr. Girish Ahuja ji for his wonderful session and the way he has answered the questions precisely, and the time management of this session has to be especially credited. And of course, my co-student was today CA Purushottam Khandelwal ji. We were studying like students. It was a wonderful experience altogether. Thank you so much. And honestly, sir, we would have not even got an opportunity to sit in a 900 student hall. Today, we are sitting one-to-one and learning with Girish Ahuja. That's one of the most wonderful moments I will remember for a long time now. And this has also brought in, the session will now continue, and we'll reach the second speaker of the session today. With the permission of the Honorable Chairman, may I just proceed with the introduction of the second speaker?
Yes, sir. Yes, sir. Yeah, you continue, sir. Continue, please.
Thank you. So CA Manoj Kumar Goyal ji, he is an expert in indirect tax and has handled complex indirect tax assignments successfully throughout his career. He has also written numerous articles and books related to indirect taxation. He is a skilled trainer and speaker on indirect taxes and has delivered insightful sessions in approximately 500 workshops and seminars organized by different trade and professional associations. We are extremely honored to be in the presence of such a highly dignified personality. I hand over the session to CA Manoj Goyal ji for his remarks and his session of the next 1 hour. And you can post your questions. I'll be taking the questions in the end of the session. Also, you want the questions on different times, you can tell early on.
Thank you very much, Nakulji, for such a generous introduction. Chairman sir and Secretary sir and all the other dignitaries who are present today. Thank you very much for providing me this opportunity of being here on the program of CPE committee for today. It's an honor to be here, and the responsibility which has been given to me is to talk about the recent amendments as well as developments in the field of GST. including a bit of touch base about two changes which has been proposed in the recent union budget in GST. So as we have around 60 minutes to interact, so first maybe another maybe 5-10 minutes, I will just talk about two significant changes proposed in the finance bill 2024, and then we will move on to some significant judgments which have been delivered either by the Supreme Court or the various high courts, which will lead us to a different way of practice in terms of how we've been taking taking up the practical challenges when it comes to dealing with various issues under GST. So first of all, we'll talk about only two, but I feel being significant changes proposed in the finance bill. The first one being the provisions related to ISD, the input service distributor. The whole section has been proposed to be replaced. And obviously the changes which are incidental to the provision of the ISD section, which is section 20. So we will not get into the threadbare discussion about what the changes talks about, because it's a lengthy discussion. It will eat up almost all the time that we have today. So in the interest of saving time, we will stick to only the basic intention of the lawmakers in making these or bringing up the changes. So what I understood from the change proposed is that input service distributor and a word cross charge. So incidentally, the word cross charge has not been defined or even used anywhere in the law, but that has been very prevalent terminology, which has been interchangeably used. In some cases, we used to say that a person or a registered person under GST who has multiple registrations will need to issue some invoices regarding its own self-generated services, or maybe services obtained on behalf of another registration number of the same registrant, by way of issuing an invoice under cross-charge or under input service distributor. So recently, the department had come out with a circular explaining that there have been a lot of interchangeable decisions taken by big corporates, especially having multiple registrations, where one was issuing a cross-charge invoice for a certain category of service, and the other entity was issuing an ISD invoice at the other hand. So while at one hand, the department or the government decided to do away with whatever has been taken or done by various taxpayers till date, by saying that whosoever has done billing under ISD or under cross-charge will be taken as it is and no penal action will be taken, because the law itself was unclear about where the ISD registration is to be taken and under what circumstances it has to be done under the cross-charge category. But now, with the introduction of this new section, which is an overhauling section for IST-related provisions, there is a clear-cut demarcation or a line which has been drawn, and it has been proposed now that wherever the provisions of ISD are applicable on a particular registered person, he will definitely have to obtain an ISD registration, and all these services taken under the ISD registration would have to be further invoiced to different registration numbers or at the same PAN number through ISD invoicing only. So that interchangeability is no more allowed once this provision is approved by the parliament. So it's only the finance bill, of course, we all know once it is approved, then of course the interchangeability of cross-charge versus input service distributor will not be there at the liberty or flexibility at the hands of the registered persons. So that is a significant change. So though we are not talking about the nitty-gritties of how this section will actually come up, but the fact of the matter is that we all, whosoever has been dealing with the clients who has multiple registration numbers, and all those taxpayers who've been availing certain services on behalf of other branches of the same company, would now have to be very, very considerate about the input service distributor category services, and making sure that If there is a requirement to obtain ISD registration, then it has to be taken. And if there is a need to distribute these services by way of ISD invoices, then it has to be done. So that is one significant change which has been proposed in the finance bill. And the second one is a change in section 122 of the CGST Act. Another subsection has been added, which is to put in a penal provision for the people who are working in a specific industry, specifically the people who've been into these pan masala, gutka manufacturing companies, etc. So there has been a provision which says that every such company who's been into that specified, into the production of some specified goods will have to get themselves registered. All the machinery that they are putting up in their plant has to be registered. And if it is not registered, then some penal consequences will follow. So that is another change which has been proposed in the finance bill. So these are only two changes which have been brought in this finance bill. And I think more importantly, the ISD provision, we all must first understand in spirit and then try and implement this wherever it is applicable, because now the liberty of interchanging the ISD versus cross charge is no more there. So with this now, let's come to some significant developments in the form of some judgments which have come out by either the Supreme Court of India or in certain cases, various high courts. So I have taken out a list of around 8-10 significant judgments, which I think will overall impact the way people have been complying with the provisions of law, and some guiding factors as to how do we ensure that the compliance is done in letter and spirit. In order to talk about all those judgments which I have taken for the day, the first one being Vardhan Associates Private Limited versus the commissioner. And this order is very recent, passed by the Supreme Court in the month of October 23 only. So in this particular case, Supreme Court has upheld the penalty imposed under section 129 subsection 3 on the grounds that the goods were being moved with an e-way bill which had expired long back. Neither the extension for the e-way bill was applied for, nor a fresh e-way bill was generated. So the facts of this particular case were that some material was being transported and e-way bill was generated on 30th of May 2021. And then the goods were supposed to be delivered at the destination as per the given guidelines within 9 days. That is 9th June of 2021, the goods were supposed to reach at the destination. And the goods did not reach at the destination even on 17th of June, which was precisely around 8 days beyond the period of expiration of the e-way bill. So as provided in section 129(3), if the vehicle carrying some goods which are taxable under GST do not have the prescribed documents along with it, then they are subject to detention. And of course, the penalty proposed in section 129 subsection 3 is 200% of the tax applicable. So, and interestingly, it does not talk about the intention to evade tax. If you read section 129, very interestingly, it doesn't talk about whether the person carrying the goods had the intention to evade tax or no, is not there in the section. So when the goods were detained, the e-way bill which was accompanied the goods were expired, and it was like old e-way bill which expired on 9th of June, and the goods were detained on 17th of June. So a 200% penalty, which is in this case was totaling to around 54 lakh rupees, was imposed by the officer who had detained the goods. So the matter went on till Supreme Court, and the Supreme Court said that while we are inclined to intervene in the matter, and we feel that it is not justified to keep the penalty the way it has been imposed, that is 54 lakh rupees, that is 200% of the tax applicable, but we are willing to still impose 50% of the penalty proposed and upheld by the High Court, which was 27 lakh rupees or 100% equivalent to the tax value. So what it means, I think most of us have been of the opinion that not having an e-way bill or an e-way bill which is expired is not an offense which can carry the penalty up to 200%, which is provided in Section 129. But looking at this Supreme Court judgment, where it is clearly said that if the law provides for certain requirements in terms of carrying the documents, and there is a blatant abuse of not complying with the provision of the law, then obviously the penalty is impossible, which means that one cannot take these provisions very lightly. And if the Supreme Court is of the view that 100% penalty implication, although there was no intention to evade tax, and even in the order, at no stage it was proven by the department that there was some intention to evade tax, but still penalty worth 100% of the tax value was upheld by the Supreme Court. So that, according to me, is a guiding judgment. And we all must be very, very careful while advising to the taxpayers and clients about complying with the procedures and provisions given specifically regarding the movement of goods on road. So that was one judgment which I thought I should include in today's discussion. And I really feel that this was something important for all of us to know. So I will repeat the name of the judgment once again in case somebody wants to note this down. It is Vardhan Associates Private Limited versus Assistant Commissioner, Supreme Court order dated 31st October 2023. So the next one which I have taken out in my list is Induch Industries versus the state of Uttar Pradesh. That is the Allahabad High Court judgment, which is little contradictory, but the facts of the matter are totally different. In this case, it is again something pertaining to the movement of goods on road. So it says that in an e-way bill, incidentally, the vehicle number was put in wrongly, a different vehicle number instead of the vehicle in which the goods were being moved. So all other particulars, including the invoice value, including the goods quantity, etc., were correctly mentioned in the e-way bill, but the vehicle number was placed wrongly in the e-way bill, and the vehicle in which the goods were being moved was different than this. So the Allahabad High Court had given an order that merely on the ground that it is a clerical mistake of not putting in correct vehicle number, whereas the department or the officer concerned who has proposed to detain the goods has nowhere alleged that there was an intention to evade tax. So it does not call for imposition of penalty, and the order was set aside and relief was given to the taxpayer. So while in the first case we discussed that the Supreme Court was harsh enough to say that in case there is an expired e-way bill by a margin of 8 days, then it calls for a penalty, and that to 100% of the tax value. And in this particular case, where the e-way bill had all the other components which were required, but the vehicle number was wrongly put in the e-way bill, then in that case, Allahabad High Court was of the opinion that this is merely a clerical mistake in nature, and it does not call for imposition of penalty. So the order was set aside. I will again repeat the name. This is Induch Industries versus the state of Uttar Pradesh, Allahabad High Court judgment. Now, coming to another one, again, Allahabad High Court judgment, Shriram Glass versus the state of Uttar Pradesh, Allahabad High Court. This judgment is about cancellation of registration. So this is again a very interesting and a path-breaking judgment. It says that cancellation of registration merely on the ground that business is not being carried on as on the date of inspection is not appropriate. So while the cancellation order was passed saying that at the time of inspection, which was on a current date in the year 2023, the departmental officials found that there was no one available to prove that the business was continuously happening at that place, and there was no stock being maintained on the date of inspection. So the departmental officials proposed that under Section 29, subsection 2 of the CGST Act, it calls for cancellation of registration, and that too from a retrospective date. So the High Court said that this is not sufficient to say that on the date of inspection, there was no stock available, and it seems like the business operations were not continuing at the place. Calls for a cancellation of registration, and that too from a retrospective date, is not justified and against the principle of natural justice. So the court intervened and said that no cancellation order can be passed and sustained in case it is proven that on the date of filing of the returns and the particular transactions reported by the taxpayer, the business activity was being undertaken, and the department does not have any proof to say that the business activities were not undertaken during the period for which the returns have been filed. It does not mean that the assessee was never taking up the business activities from the premises concerned. So the cancellation order from the retrospective date was set aside, and the court gave relief to the taxpayer on the ground that merely proving that on the date of inspection there was no stock available and the business activities were not undergoing does not mean that the taxpayer was not doing any business on the date when he had claimed to have undertaken transactions and filed returns accordingly. And retrospective cancellation of registration is not called for. So the decision was given in favor of the taxpayer petitioner, and relief was awarded to him. So that is, again, I would say, is a very important judgment, which says that one has to, in case the department wants to cancel a registration from a retrospective date, it has to prove that the business was never undertaken or was not being undertaken from the date from which it proposes to cancel the registration. So next in the line is Engineering Tools Corporation versus Assistant Commissioner, judgment from Madras High Court. So it is again a very, very important judgment, and I thought it appropriate to include in the list for discussion today. So it talks about the transactions should be tested for the period of occurrence. The present non-existence will not matter. Documents must be examined before asking for reversal of ITC. So Madras High Court, in this particular case, the name of the case is Engineering Tools Corporation versus Assistant Commissioner of GST. Madras High Court said that it is not important that currently what sort of existence or non-existence the department is proving about a particular taxpayer. This was a case where a taxpayer had availed the input tax credit on the basis of some invoices received in the year 2018-19 and 19-20 from a particular supplier. And the department had issued a notice and then an order asking the taxpayer to reverse this input tax credit, which he had claimed on the basis of invoices issued by a supplier, which was proven to be non-existent in the records of department in the year 2022. So the court in this case had said that it is not sufficient to prove that the entity was non-existent on the date of inspection, which was in 2022, whereas the transactions were undertaken in the year 2018-19 and 19-20. So the department has to prove that the transactions were bogus or non-existent, or the taxpayer was non-existent on the date of actual happening of those transactions, which is 19-20 and 18-19. Merely proving that the taxpayer, the supplier, was non-existent on the date of inspection, which was way beyond the period in which the transactions were undertaken by the taxpayer and input tax credit was availed, is not sufficient. So the order reversing input tax credit of the taxpayer on the ground that the supplier was proven to be non-existent at a later date is not sufficient, and the relief was granted to the taxpayer in this case. So we all come across many such situations where a particular taxpayer would be asked to reverse the input tax credit on the basis of which he has availed on the basis of some invoices from a supplier who has been declared to be non-existent by the department. So this case, I think, is going to be very, very helpful while litigating all such cases where the taxpayer claims that the supplies were genuinely obtained and all the formalities or compliances as per law were done by the taxpayer on the date of entering into that transaction. So even if the department proves that at a later date the supplier was proven to be non-existent is not sufficient, the department rather will have to prove that the supplier was non-existent on the actual date of transaction. So that is, again, I would say Engineering Tools Corporation versus Assistant Commissioner, Madras High Court is a very good guiding judgment for all of us. And wherever we are litigating about input tax credit being wrongly asked to reverse, this judgment can help all of us. Another one is very interesting, Rainbow Stones Private Limited versus Assistant Commissioner Hosur. So this judgment is again from Madras High Court. It says imposing tax recovery without giving any reason is liable to be remanded back. The order must record reasons. So in other words, unreasoned order is against the principle of natural justice. So this order was passed in the matter of Rainbow Stones Private Limited versus Assistant Commissioner Hosur by Madras High Court. So in this particular case, what had happened was an order was passed imposing tax recovery, and there were no reasons given in the order per se as to why the officer concerned was not agreeing to the responses given by the taxpayer. So the whole matter was like this. There was some difference between the returns filed by the taxpayer, based on which a notice was issued to the taxpayer explaining as to why there is a difference between in the values declared in different returns. And there was a response filed by the taxpayer. So the order passed by the Assistant Commissioner merely mentioned that the response has been filed by the taxpayer, but it is not satisfactory. Hence, the recovery of input tax credit is being asked for through this order. So the court, Madras High Court in this case, said that there was absolutely no reason given by the officer as to why the responses given by the taxpayer were not sufficient for him to consider, and why he said that the reasons given by the taxpayer were not sufficient or were not acceptable. So it was merely in one line where the order said that the explanation given by the taxpayer is not sufficient or acceptable, and that is why the recovery of input tax credit availed by the taxpayer will be confirmed. So the High Court in this case said that a non-speaking order, unreasoned order, which does not even talks about why the explanation given by the taxpayer are not acceptable, is against the principle of natural justice, and this calls for a remand back and reconsideration by the authorities. So again, the matter was remanded back, directing the Assistant Commissioner to look at the reasons given by the taxpayer, and then on the merits of all the responses or reasons given by the taxpayer, come out with a speaking order as to why the officer is not convinced or accepting the reasons given by the taxpayer. Again, a greatly guiding order. According to me, we all face or come across orders which are non-speaking in nature. And we also keep getting a lot of such instances where the officers in the order does not mention anything about a particular decision, but they generally pass order by giving only one line answer that the submissions made by the taxpayer are not acceptable. So this order is going to give a lot of strength to the submissions where we all feel that the officer has not taken on record the submissions made by the taxpayer, and we all can expect some sort of relief at various levels using this order. So I will repeat the name for the benefit of everyone. This is Rainbow Stones Private Limited versus Assistant Commissioner Hosur, and the order passed is by the Madras High Court. The next one is Abhishek Trading Corporation versus Commissioner Appeals. Allahabad High Court has given this judgment. So it says that, and this is very, very interesting. I think we all must keep a note of this, and this is very important judgment. So it talks about Abhishek Trading Corporation versus Commissioner Appeals. The Allahabad High Court judgment says that no appeal can be admitted beyond the limitation period as provided in section 107 of the CGST Act. So we all know that presently there is a time limit given for filing an appeal against any order. And the time limit under 107 is, for a taxpayer, it is 3 months and plus a 1 month condonation. If sufficient reason is given, then the Commissioner Appeals can condone the delay up to a period of 1 month. So put together, the total period cannot be beyond 4 months. So now, in this particular case, the taxpayer approached to the High Court on the ground that the Commissioner Appeals did not accept the appeal, or rather rejected the appeal on the ground that it was not filed within the time limit specified. Also, the taxpayer mentioned that Section 5 of the Limitation Act talks about a different limitation under which you can go and file appeal, and the condonation request should be accepted in case there are sufficient reasons to convince the appellate authority. But in this case, Allahabad High Court has given an adverse order saying that in a particular statute, if there is no liberty given or no reference is given to the Limitation Act, and specifically in section 107, strict timelines have been provided, which is not beyond a period of 4 months, then in that case, no appeal can be accepted. There is no liberty given to the appellate authority to condone the delay beyond that specified period. So which means no appeal can be accepted beyond the limitation period as provided in section 107 of the CGST Act. So, and then this High Court judgment also refers to a Supreme Court judgment, which again speaks the same thing, that 107 is a sacrosanct time limit, and you cannot expect to file an appeal beyond the limitation period given in section 107. So we all must note that if the High Court and also the Supreme Court is of the view that no appeal can be filed beyond the limitation period of 107, which is 3 + 1. And I've seen many cases where even that 1 month's condonation has not been given by the commissioners in case you are not able to give convincing reasons or reasons which are acceptable for condonation, because that is a discretion of the commissioner whether he will accept that delay of 1 month or not. So we all need to make sure that the appeals at the first appellate level, which is to the commissioners, to be made in time, which is 90 days plus a 1 month further condonable delay. And also I've come across many such cases where the appeals which were supposed to be filed within time have not been filed within time. So once the appeal becomes time barred under GST, then a taxpayer is left with very limited options. So we all need to be very really concerned about this fact that appeals beyond the limitation period cannot be filed, have also been now decided in the various courts, including by the Supreme Court also. So we have to be really mindful of this fact. So I will again, because I personally feel this is very important judgment, I will again repeat the name. It's Abhishek Trading Corporation versus Commissioner Appeals, Allahabad High Court judgment, which says that the limitation period is sacrosanct. You cannot file an appeal beyond the limitation period. Then another judgment is Kaleidoscope versus State of West Bengal, Calcutta High Court judgment. It says that order of attachment of bank account uploaded on the portal, the GST portal, is sufficient to prove that the order was delivered. So what happened in this particular case was that a taxpayer has been given an order of attachment of the bank account, and the bank account was attached based on that order. Whereas there was no physical delivery either through email or through some other communication, including registered post, etc. So it was only one mode of communication where the order was delivered by way of uploading the same on the common portal, on the GST portal. So the taxpayer took out the print of this order and then filed an appeal saying that it is not sufficient to only upload the order on the portal and then go ahead and attach the bank account. So Calcutta High Court in this case has ordered that this is sufficient from the department side to upload an order on the portal. And specifically when the taxpayer himself claimed that he had taken out the printout of this order which was uploaded on the site, which means that he was aware about this order and the implications of the order and how it was made applicable was also there in the order itself. So there is no room for us to say that the delivery did not take place. Also, Section 169 of the Act clearly mentions that the electronic mode of communication includes uploading an order on the portal as well. So the conclusion through this judgment is that we should not ignore the orders or any notices or other communications of the department uploaded on the website. And there has been numerous instances where various courts have said that all such communications, wherever they've been uploaded on the website, are sufficient communications and they should be regarded as good delivery of the orders. And there has not been two views about this in the recent times, that in this electronic time where we all communicate various modes of communication which are electronic, we should accept that uploading a particular order or notice or any other document on the website is more than sufficient to prove the delivery of the orders. So again, this was a Calcutta High Court judgment which said that the attachment is as per law of the bank account, and merely saying that we did not receive any order by post or through some physical mode is not tenable. So coming to the next one is Ananya Metals and Alloys versus Union of India, Delhi High Court. So Ananya Metals and Alloys, Delhi High Court judgment, again, very important on provisional assessment again. So it says provisional attachment under Section 83 cannot continue after the expiry of 1 year as prescribed in law. So the fact of this particular case was that an attachment, a provisional attachment of the CC account and bank account was done through an order under Section 83 by the commissioner. And as we all know that the section itself says that the provisional attachment cannot continue beyond a period of 1 year. But in this particular case, more than 1 year had lapsed and the provisional attachment continued. So this company, Ananya Alloys, Metals and Alloys, approached the Delhi High Court. Delhi High Court said that there is no room for a different interpretation. The section itself is very, very clear about this thing, that the provisional attachment cannot go beyond a period of 30 days, beyond a period of 1 year. And in this case, because the period of 1 year has already lapsed, which clearly means that the provisional attachment has to be removed. So we all need to know that I have also seen multiple cases where once the provisional attachment order is given, then that 1 year's timeline is not adhered to by the department in many, many cases. So with these kind of judgment, and this is not the only one, I have seen other judgments also where the courts have said that the provisional attachment should be revoked once the period of 1 year as given in the law is completed. So accordingly, we all need to aggressively follow up with the department wherever there is an attachment going beyond the period which is prescribed as per Section 83. So that's another judgment which I thought was important for all of us to discuss in today's webinar. The next one is KI International Limited, Madras High Court judgment, KI International. So this is also very, very important. So the basic provision upon which this judgment has been given is that in the law, there is a provision that if you have to pay some tax and you apply to commissioner for making the payment in installments, there is a provision that the commissioner has a power to give you liberty to pay your tax within 24 installments, maximum 24 months. So now in this particular case, there was a difference between the outward supplies reported in GSTR 1 and GSTR 3B. So when the department sent a notice, the taxpayer agreed that yes, there is a difference and there was a higher liability declared in GSTR 1, but a lower liability paid through GSTR 3B, which resulted into some liability arising on the taxpayer, and which he admitted that I will be obliged to pay this. But then he approached the commissioner requesting for a 24 months installment based scheme, which should be given to the taxpayer, was an application which was moved by the taxpayer in this case. So the commissioner rejected this application on the ground that a self-assessed tax cannot be paid in installments. This is beyond the scope of the section. So aggrieved with this order, KI International Limited approached Madras High Court, and the High Court also upheld the original decision of the commissioner, in which it was said that the self-assessed tax cannot be requested to be paid in installments. It is only the tax which has not been self-assessed by the taxpayer, which can be agreed to be accepted by the department within the 24 months installment criteria, and not the tax which has been self-assessed by the taxpayer. So it was held that GSTR 1 is a return which is which will be considered as self-assessment of the tax liability. And if somebody has filed a GSTR 1 agreeing or accepting that there was an outward tax liability which was not discharged through GSTR 3B or was not completely discharged, a partial payment in 3B, then the differential amount will have to be paid in one go, and the installment criteria cannot be applied in this case. So again, learning for all of us, that in case some tax has already been self-assessed by the taxpayer, then it has to be paid in one go, and the installments provision will not apply to such cases. Okay, so after this, I think the judgments that I had in my list, more or less, there are a few others, but I don't think they're as important. So I will just take up a few more matters, which I thought are probably more important than the list of some of the judgments which I have deliberately decided not to take up. The first one on my list is that there is a provision in section 122, which is the section prescribing the offenses which lead to penal consequences, including prosecution in certain cases. So one of the offense in section 122 is when you collect the tax but do not deposit within a period of 3 months. So there is an offense which says that tax collected but not deposited within a period of 3 months will lead to penal consequences, and the penalty can be up to 100% of the tax evasion. So I have come across some very interesting notices, and in certain cases orders as well, where the department has imposed 100% tax as penalty under section 122, saying that the tax was collected but not deposited within a period of 3 months. So I will give a practical example as to in what sort of cases we can end up getting such notices followed by orders. So in one particular case, what had happened was there was a maintenance agency who was taking care of the routine maintenance of a particular housing society which had around 500 odd apartments. So the maintenance agency was collecting the monthly maintenance through that prepaid meter, which we all know that in these metro cities nowadays, all these maintenance agencies would have some prepaid meters, and the electricity will only come when you get them recharged. So while collecting that amount, the GST is inbuilt in that prepayment. So it means that the collection of such tax is happening on regular basis. So what had happened in this case was that because of some lags at the accountant or something, the returns for a period of around 8-9 months or maybe more than that were not filed. And it so happened that the GST department made a survey, and they found out that the returns for last 9-10 months were not filed. Although the total tax liability, which say for the sake of taking an example, was 1 crore rupees put together for all 10 months, and around 60 to 70 lakh rupees of ITC was also available with them. But because of some lags at the accountant or maybe some other issues, the returns for 10 months were not filed. So the department asked them to file all the returns, which the taxpayer had promptly done. So within next 3, 4, 5 days, all the returns for last 10 months were filed. The input tax credit worth 60, 70 lakh rupees was claimed, and the remaining whatever 20, 30 lakh rupees was paid in cash. So resulting into all compliances normalized, and wherever there was a delay in filing the returns, so all the late fees, etc., was also paid. So now the department, once they got to know that all the taxes have already been paid, department issues a notice much later than when the compliance was actually done and everything was complete, saying that the taxes have not been paid, which were collected in time, were not paid beyond a period of 3 months. And it calls for a penalty under section 122, because one of the clause says that if you collect taxes and do not deposit the same within a period of 3 months, then it is liable to penal consequence. And the penalty could reach up to 100% of the tax evaded. So on that very ground, they said that this 1 crore rupees of tax, which had a 60 to 70 lakh rupees of input tax credit and maybe another 30 lakhs paid in cash. So a show cause notice was issued asking the taxpayer as to why a penalty equivalent to 1 crore rupees, which was collected but not paid beyond a period of 3 months, should not be imposed on you. And then after considering the submissions given by the taxpayer, an order was issued by the assistant commissioner imposing a penalty of 1 crore rupees. So while there could be at the higher appellate level, maybe at commissioner appeal or at other level appellate tribunal, etc., it could be decided in favor of the taxpayer. But the message I wanted to give to all of us was that this is something which we have all been doing in one or the other cases very, very regularly, where the returns for a certain period have not been filed. Today, there are more restrictions that if you don't file your returns in time, then your e-way bill will be blocked. Or if you don't file your GSTR1, then 3B, and vice versa, you will not be able to file your returns. So it is not as prevalent now to avoid filing returns in time, but still there are delays. So filing a return belatedly has one outcome which we all know is about the late fees that we have to pay. Another one probably which we are aware is that there could be some interest in case there is a delayed payment of tax. So that is the second one. But the third thing, which probably most of us do unknowingly, is that in case we have already collected the tax, have not deposited the returns, consequently not deposited taxes beyond a period of 3 months, then it may lead to a penalty under section 122, which is 100% of the tax amount. So there could be obviously two ways or to interpret this, that once the tax has already been deposited, the word evasion cannot be proved. But on the other side, there is a whole Pandora of litigation around this as to how will you prove that until the tax was not deposited, whether there was an intention to evade tax or not. So it definitely leads to litigation, which could be prone to getting settled in favor of or against the taxpayer. So I believe that all of us who've been into routine compliances there are possibilities that we would know for sure that the late fees is coming up in case we are delaying filing the returns, and also the interest. We all of us are aware. But the third thing, which is in the form of penalty under Section 122, which could be also a possible threat. Probably all of us do not even consider that. So through this example, I just wanted to make sure that we are well aware about this provision also. And in many cases, this is not only something hypothetical. I have seen in more than one case where not only the show cause notices on this ground have been issued, but also the adverse orders have also been given or issued. So with this, I think as far as the monologue is concerned, I am almost done. So Nakulji, in case there are any questions or you want to open the floor for one-on-one questions, please do that.
We most certainly have questions. First of all, thank you. It was well explanatory. Most of the cases that I've noted down, I think you explained them pretty well. Although we do have a lot of questions from the panel, from the audience. I will start taking them one by one now. Just give me 1 second. Just a second. Just marking as far as most relevant questions can be taken. So the first question here is from Hyderabad. The question from the honorable member is under GST, the registered person has to prove the GST paid by the registered person was actually paid to the GST department and returns were filed. Why ITC be given when the GST paid is not paid to the GST department and return not filed?
No, very, very interesting submission. So I also do agree that in the law, there is no ambiguity as far as this particular point is concerned, that one of the essential requirements of Section 16 is that the supplier has to pay tax and through legitimate sources, either through ITC or in cash. Then only the ITC is available to the recipient. But having said so, there have been divergent views as to, in certain cases, the courts themselves have said that once you have, as a recipient of a supply, one has paid the amount of tax to the supplier, and there is no reason for the recipient to think it otherwise, that why a taxpayer who has already taken the due amount of tax would not deposit it with the department. And also there are very limited means of actually knowing and proving that the tax was paid with the department. Then how can it be the responsibility of the recipient? It has been held in many cases and both ways. Like in certain cases, courts have taken a view that the law is very clear. If the supplier has not paid the tax, the recipient cannot take input tax credit. But there are divergent views on this. And we all know that only time will settle these issues, because there are some arguments in favor and some other arguments against. So in one line, we cannot conclude, but the honorable member from Hyderabad is right in saying that the plain reading of law is very clear. Unless the tax is paid by the supplier, you cannot avail the input tax credit. But then there are so many litigations, and in many cases, the courts have also taken a view which is otherwise.
Thank you. So let me move to the next question, which is GST applicable on TDR received from the government for surrendering land for road?
Sorry, can you repeat that, please?
The land is surrendered for road, like road construction is going on. So land is surrendered and the government gives us TDRs, transferable development rights.
Okay.
So is there GST applicable on such TDRs? I don't think it will be. Yeah.
Very honestly, I only could understand half of the question. So when we say that in lieu of surrendering the land, so suppose I am the owner of the land and government acquires my land because some road has to be constructed on the road which is owned by me, right? So in return, government gives me some TDR.
Yes, sir.
So how does it work? I mean, my question may be naive, but I am really not sure.
No, that's the only question. I believe that the gentleman wants to ask that the TDRs which will be received, like for the land sale, GST will not be applicable. But for the TDRs that they will receive, will there be GST charged on such TDRs?
I think it'll be unjustified to answer this question based on these limited facts.
Single line.
I would rather like to reserve my answer. And obviously, if I get some more details about this particular instance, then probably my answer could justify. But as of now I would like to reserve my answer on this.
Perfect, sir. And I hope that see Deepak Khimji ji, if you can repeat your question in the next 5 minutes, I can maybe you can just rephrase your question and I can take it again. Moving on, will charitable institutions also be fined for not? Okay, this is again an MSME related question which is coming. So sorry. Monetary limit for raising tax demand by the way of SCN in case of state jurisdiction by various officers of the state tax. What is the monetary limit? That's what they're asking.
No, there's no monetary limit as far as I know that under section 73 or 74, any amount of tax can be demanded based on the short payment, non-payment, or the fraudulently refunded amounts. There is no limit given in any of the sections. So as far as I know, a demand can be raised for an amount maybe 1,000 rupees also.
Perfect, sir. Sir, along with this, these questions, I just had a small question and I was able to handle it. This is related, this is purely my question. That the weighing slip, which is asked a lot of times in certain cases, is, maintaining the weighing slip mandatory anywhere in the law or any judgment has been passed according to it?
No. As far as my knowledge is concerned, it is only a corroborative evidence to prove or justify your case that the actual supply of goods have taken place. It is one of the additional documents which might give you a kind of benefit whenever you are representing your cases before various authorities, just to justify the supply undertaken. But nowhere in the law or otherwise it has been mandated that a weighing slip is required.
Thank you so much, sir. Moving on to the next question. Okay, some people are just trying to reach to the finance minister, so I'm skipping those questions. That's it. Again, okay. Many times the orders are uploaded only on the portal, which are not viewed. Is there any remedy? Why does not CBIC direct officers to serve orders physically or through email? This is a very common problem which we are facing. The orders are only uploaded on the portal, and most of the cases are that the email ID uploaded in the GST portal is maybe reserved with the old accountant or someone. Otherwise, even sometimes they're not getting a message. If this is what happens, what is the remedy available to the assessee, taxpayer in GST?
See, Nakulji, with my limited knowledge, I think practically we do not have any such remedy. The only thing is to be more proactive in terms of having the right email IDs and right mobile numbers uploaded. And what in my personal experience, 99% cases, if you have the right mobile number and right email ID, anytime there is an uploading of any sort of order or other communication on the portal, you will instantly receive a notification through mobile, through an SMS alert, and also through email. So while, as I said, in many cases, the courts have also upheld that uploading any order on the website is sufficient. So I don't think that we have too many choices here, but to be more vigilant and ensure that the right contact details, including email ID, etc., is updated on the portal.
Perfect, sir. Moving on, is there is pre-deposit for appeal mandatory? Okay, that's one question. The second half is there any way that an appeal can be admitted without the pre-deposit fees?
No, actually, the law is very clear. If you read section 107 or 109, the pre-deposit is a mandatory precondition. But yes, of course, in some cases where you feel that there is a very high-pitched assessment or the order is absolutely baseless, and there is a very, very high value of pre-deposit which you have to deposit for no reasons, then of course you have a writ mechanism. You can go to the High Court and ask for a waiver of the pre-deposit. That is only an exceptional thing. But as far as the plain provisions of the law is concerned, no appeal can be admitted unless the pre-deposit as prescribed in the law at first appellate level, 10% of the tax dispute or the disputed tax amount will have to be mandatorily deposited. Otherwise, no appeal can be admitted.
Perfect, sir. We've received the clarification on the question which we received earlier about the TDR. He's asking, is GST applicable on the sale of TDR received in such a transaction where land was being surrendered instead of for road building? We received a TDR. When we sell the TDR, will GST be applicable at that time?
Yeah, I don't have any doubts. Yes, of course, the sale of TDR should be taxable. Yes.
Okay, perfect, sir. And whether ITC on IPO related expenses is allowed or not. We have a certain queries regarding this. I'll ask you one by one. So firstly, ITC available for IPO related expenses.
See, I do not see any reason as to why IPO related expenses will not be considered as business expenses. So my understanding about eligibility of input tax credit is every input tax credit is allowed if it has been incurred during the course or furtherance of business, and there is no specific disallowance in the sense that either some section 17 restriction or some other restriction in availing ITC. So according to me, IPO related expenses are very much in the course or furtherance of business. So I don't find a reason as to why ITC should not be available on these expenses.
And similarly for ITC on GST paid on long lease to MIDC. Like SIDC in our area, MIDC would be moving.
So lease pay ITC on lease rental paid to the industrial development corporations, right?
Yes, sir.
Okay, that is a very tricky question. I think rather than answering it in yes or no, it's better to examine this, because I think some section 17 restriction might come up here. So better we examine this in more detail and then only answer.
I have a similar question then, sir, because if I'm buying a property which we buy under construction and I'm buying it for my office purpose, usually I have to pay GST if I need to get the registry done early on.
Yeah.
And this is a practical problem that I'm facing. Will I be able to claim this GST in my
not to my understanding. My offhand answer will be no.
Because in the running business, we are buying an additional property for the office. We're just expanding into that area, but I don't think that will be available. So because that lease
I
was
am
not
also of the same view that yes, apparently it will not be. But again, this is a subjective thing. We might have more elaborative discussions and research on this. But my offhand answer is no.
Okay, now I have a question from Amritsar, which is in case of over-the-counter sale in excess of 50,000, is it necessary to mention the name of the buyer and address of delivery, even if the supplier is unregistered? Supplier is unregistered. I think they want to say buyer. And if yes, can the shop be taken as the address of delivery, and how will the seller issue the e-way bill? Okay, so I'll ask the question broad terms. The term is very simple. So probably they want to say, let's say I am sitting on a counter. I am selling, let's say anything, let's say a television for 60,000 rupees, and it's a B2C sale. So will I have to issue the address of delivery and e-way bill in this case? The sale is over the counter. You buy the TV, you put it in your car and you take it home.
See, there are two aspects to this question. The first one is whether the details of the buyer are to be put in, including the address of the buyer, in case it's a B2C sale, but the value of the sale is more than 50,000 rupees, right?
Yeah.
So if I remember Rule 46 correctly, I don't think it is mandatory unless the buyer asks for it. If the buyer requests for it, then it is mandatory. Otherwise, it is not. But in case the value of the goods is more than 50,000 rupees, then whosoever initiates the transit of the goods, the e-way bill has to be generated unless we prove that the delivery was over the counter and the person who is carrying the goods is not a registered person. In that case, only you can avoid e-way bill. Otherwise, anything which is beyond 50,000 rupees, ideally e-way bill should be there.
Perfect, sir. And is there any late fees applicable on CMP 08 as the portal is not demanding any late fees from the from the filers? Composition form given.
Composition form.
Yeah, CMP 08. Late fees, is it applicable on that or not? Because the portal is not asking for it.
I will have to pass this.
Pass this.
I don't have a, yeah.
Perfect. No, that's okay. Moving on, we have a question from Bangalore. The GST, there was a GST on RCM expenditure was paid in GSTR 3B of September 2020. This pertains to the expenditure of March 2020. Now the department has issued a show cause notice for the recovery of interest for the differential period. Is there a way to defend this? Because had we paid the GST in March 20, we would have claimed the ITC in March 20. Okay, they claimed the ITC in this September again. So, like, what's the technically
No,
it's
see,
no.
yeah, I've understood this. So basically, plainly, if I go by the book, then the department asking for interest for that period of 6 months is not unjustified. But only on the ground of revenue neutrality, you can definitely go and contest this. So it depends, like you have some merit in your argument. But in that case, if we go with the same logic, then in many cases you will end up in the same situation where the ITC was not claimed within time, and because of that your payment was delayed. So you will again say the same thing, that the interest should not be payable on these amounts. So it will probably open this box. But yes, in one line, if I have to answer, you have a valid point of revenue neutrality. And saying that if I would have paid in March, then I would have claimed the ITC in the same month. And that is why I am not liable to pay interest, is a saleable argument. And obviously, you can go ahead and fight on that ground.
Okay, sir. There is another question which is related to unbilled revenue. Just a second, sir. 1 second, please. So sorry. Here it is. In should unbilled revenue for financial year 17-18 be billed and declared in April's return service within 30 days of provision of service, because the company followed the percentage of completion method and billed it accordingly in May 2019 and declared it in May's return. The officer has charged interest for late payment of taxes. Please guide.
No, unbilled revenue may not necessarily be provided for in the books only on the basis of actual provision of service. There are many presumptive provisions or accounting standards would follow in a different manner. So when we say under GST, the invoice has to be issued within a prescribed time limit from the date of completion of service, it is totally different from what an accounting standard says how to recognize your revenue in the balance sheet or books of accounts. So according to me, if you can prove that the invoice was issued within the timelines given under GST, and then even if it was issued in the month of May, but provided for as unbilled revenue in the March 19 balance sheet, it should not be a concern. Merely on the ground that unbilled revenue was booked in the balance sheet, one cannot say that the service was actually completed the way it was agreed between the supplier and the recipient. So completion of service under GST can have a totally different meaning compared to what it has under the accounting standards.
Thank you, sir. Now we have a huge list of questions still pending, and we have already exceeded the designated time. With your permission, can I ask a few more questions if you want to take up, or you want to suggest some alternative?
No, I'm okay. As long as all of us are okay, I'm okay. We can continue.
Okay, sir. So in case of vehicle dealer, like a car showroom, is ITC on demo car available? The car which is there for test driving and demo. Is there the ITC on that car available to the showroom?
huge litigation on this point. I have personally dealt with so many advance rulings on this matter. Some of them are in my favor, some of them are against. The first one in the list was the Kerala Advance Ruling Authority, which said that yes, demo car should be eligible for input tax credit because that's in the course of furtherance of business. But then, unfortunately, in our case, Haryana Advance Ruling Authority gave an adverse decision. Even the appellate advance ruling authority gave an adverse decision. On the other hand, Rajasthan advance ruling authority is again in favor of giving this input tax credit. So I would say that the matter is not settled. In my view, yes, it should be available for sure. Because the demo car, normally, as per policy, what happens is that they will give you some subsidized value at which you can buy those demo cars. And then once they live their life in terms of whatever 20, 30,000 kilometers they have to be run, then you can sell it in the market, of course, at a discounted rate. But when you sell it in the market, you charge GST. So my personal view, yes, ITC should be available. But on the other side, department has an adverse view, and the litigation is tilted both sides. Some are favorable, some are against.
Perfect, sir. Now the question is GST payable on Geo phone provided to customer in lieu of security deposit, just on the basis that taxable goods being given out without payment of taxes? Like instead of security deposit, a Geo phone has been given to the customer. Now, will GST be applicable? Because will GST be payable on this phone? Because it is on the basis that taxable goods are being given out without the payment of taxes. It's a very incomplete question. So just, yeah.
So I'm just trying to understand what does it mean. So if I understood correctly, then the company is giving a phone free of cost to the user, right?
Yeah.
So it is not charging any amount, but when it has bought those mobile phones, then of course it would have paid some taxes. So the question is whether the ITC will be available on all these mobiles. I think this cannot be answered in yes or no, because first we'll have to see what kind of treatment they are doing in their books. Is it like they're still showing these mobile phones as their assets, or they are showing it as an expenditure in their books of accounts? Once the mobile phone is given free of cost to somebody, it is not going to come back to my books, and I have expensed it off my books of accounts. So I think it will not be justified to answer in one go, maybe yes or no. So it depends on a lot of other factors. So I would rather say that if we have a complete picture of this particular case, then only we can conclude ITC milega ki nahi.
Okay, sir. Is a notice issued by SGST without a document identification number valid?
Yes, because see, if it is issued by the central agency, then of course it is not valid. But in many states, even today, it is not mandatory to put UDIN on a particular document. So you cannot say a document issued by the state authorities will become invalid only on the ground of not issuing it with a UDIN.
Okay. Can penalty under GST be imposed more than the tax demanded under section 16(4)?
No, penalty for what?
Penalty.
See, if we talk about penalty under section 73 or 74, then the highest amount of penalty can be equal to 100% of the tax amount. But if we're talking about something like section 129, then the section itself provides for a penalty equal to 200% of the tax value, or 100% of the value of the goods also.
Perfect, sir. And I think we should take this question in the end that some people, I'll firstly answer one question, which is a technical one, that where they can find the recording of the session. The recordings are available on ICAI TV, but that will take 1 or 2 days to upload. And the second question was from you, that can you please list out the cases that have been discussed today once in the end, so all the participants can make a note of that.
Okay, so no, I have the list available with me. In case you want me to email it to maybe you or somebody else in the committee, I can do that, and it can be circulated from there.
Sure, we'll get that. We'll get that done.
Sure.
And with those words, I think it's a pretty good time to conclude the session. I shall be providing conclusive remarks. We've had great sessions today, and the second one was mostly very interactive. The number of questions that were coming in during the session, I was having a very hard time to keep up with the pace of the questions. And because I try to ensure that the speaker is not asked the questions which he has answered during the course of the session. So I was just trying to keep up. Maybe this question has been taken up or not. It was one of the most insightful sessions. I can just say that reading the judgments with you was another level of experience, and I think I learned a lot about how the judgments have to be perceived and how the reactions has to be given. So I officially issue a formal vote of thanks to the honorable speaker, CM Manoj Goyalji, and with that, I also raise my warmest regards and thanks to the chairman of the committee, CA Purushottam Khandelwalji, and the vice chairman, CA Gyanchand Mishraji, and all the CPA committee and all the members available in the technical support and the other team members. And all the audience, of course, you've done a great job today. Thank you so much. It was just a pleasure to just be observing the questions all around. Thank you so much. Let's see you in the next session very soon. Thank you, Manoj. Thank you so much. And thank you, everyone else.
Thank you, Ji. Thank you so much. Thank you.